Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we welcome you to today's edition of the breakfast meeting. On our agenda for today, we'll be getting coverage on the equity and fixed income markets from our traders. Sheikh from CGF Boss will also be taking us through the BRVM, and then we'll conclude with headlines from across Africa by our media partners at Frontier Africa Reports. Once again, I'd like to remind everyone that the session is being recorded and it may be shared with third parties. We're also streaming live on our Vetiva online Facebook page if you prefer to view or join from that platform. The meeting is set to last for 30 minutes inclusive of Q&A, and during the course of the session, if you have any questions, you can send them in using the chat function available on Zoom, and if you're joining us from Facebook, you can make use of the comment section. Also, if you'd prefer to speak, you can use the raise hand function on Zoom and you'll be called upon to speak. We'll now be starting off with Simbiat from the Global Equities Desk, and she'll be taking us through some markets from across West Africa. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. So I'll be doing a quick rundown of equity performance in Ghana and the Nigerian Stock Exchange. Starting off in Ghana, composite index closed up by 4 basis points, with fan milk closing the session as the sole gainer. The consumer goods counter gained 6.67% yesterday and also set a new year high price with year-to-date return at 48.2%. Speaking to activity level, market traded mixed, and we also saw a 20% decline in the number of equities that participated in trading when compared with Monday's data. Going into today, we expect activity levels to remain flat with names like MTN, Cowbank dominating market activity like we've been seeing. Over in Nigeria, all share index shed 27 basis points to close Tuesday's trading session. The red close was broad-based as we saw all sectoral indices shed points, with the exception of the flat close in industrial space. Consumer goods led the pack with a 2.03 decline. This was largely on the back of price depreciation in the likes of Nigerian berries. This lost 9.93%. Livestock as well, losing 9.83%, and also our champion berries. Despite the negative close, with all share index contracting and market breadth turning negative, activity levels improved from the lower level in prior session. We saw volume and turnover increase by 41% and 28% respectively. A quick look at August overall performance. The all share index was able to close the month up by 1.74%, with year-to-date now at a negative 2.61. However, it was a bearish close for all sectors, or a significant 7.61% decline in the consumer goods space. This was a step back from what we had in July, where most of the sectors closed positive, especially the oil and gas space, gaining 20.4% in July on the back of rallies and counters like Wando and Adova. This signifies that there are no major catalysts to boost the markets. Going into today, with investors showing interest in a number of large cap names like Zenith, MTN, and GT, though at lower price points, we expect market activity to remain around this level. Thank you, and that'll be all for mine.
Thank you, Simbiat. We'll now move over to Sheikh, and he'll be giving us updates on the BRVM. Good morning, Sheikh.
Hello, good morning. Over the last week, the regional stock market fell for the first time in terms of weekly performance. Since the last 8 weeks, this was the first negative performance that was shown. The BRVM composite index has stalled at around 175 points after 1 week, as it closed at 175 the previous week. The BRVM composite performance is contrasted with its balance of variation, market being still dominated by buyers with regards to the number of stock rising much more significantly. 24 stock ended up in the green versus 14. The contradiction is justified by the fact that the large cap stock, which drained the overall performance of the market in the negative, i.e. Sonatel with minus 146% and Solibra with 19.5%, minus 19.5% stock performance compared to the previous weeks, which respectively represent 26.13 and 3.79% of the overall market capitalization. In terms of the previous week's winners, it was mainly led by Sucrivar, which displayed its dynamic growth since the publication of its 2020 results and the first quarter of 2021. The stock was carried by investor to the highest step to the podium, rewarding the best performances of the week due to the score awarded to the company by the water rating agency company. The stock has increased by 17.65% during the past week, and therefore propelling the 2021 annual performance since the beginning of the year at 180%. The other best performer was Uniwax, which recorded a weekly performance of 16.28%. It's been evolving in a bullish channel since the publication of the first quarter results, supported by the outlook for the company unveiled by their ordinary general meeting. The stock has returned to its highest points since the last few years. In terms of the market's weakest performance, Solibra, of course, as mentioned earlier, this underperformance was mainly achieved by the share justified investors who have not been requested to cash in their capital gains and the capital gains accrued by the share during the last 3 weeks. So, and in terms of highlights, Tractor Free Motors paid its 2020 dividend plans to pay its 2020 dividend on September 2nd for a total gross amount of 185 billion CFA. Server Ivory Coast published its 2020 IFRS annual statement and showed a 153% drop in net income. The drop in net income has been mainly due to the COVID pandemic. For the bond market, the market closed with a market cap of 7.099 billion compared to 7.099 trillion versus 6.9 trillion, showing an increase of 2.57%, thanks to this two simultaneous listing of Ivory Coast Treasury bond on August 26. The weekly value traded stood at 28.96 billion, mainly marked by the Ivory Coast Treasury bonds, for a total amount of 15 billion. In terms of the money market, the main issuers were Ivory Coast and Mali, who requested to the money market over 90 billion, and the market offer came back with a response of 307 billion, showing a 341% coverage rate. However, only 96 billion was retained and showing only an absorption rate of 31.2%. That's about it for the BRVM.
Thank you very much, Sheikh. Next up is Omorige, and he'll be taking us through fixed income and currencies. Good morning, Omorige.
Good morning, everybody. I'm supported by the OMO maturities of about 57 billion that came into the system yesterday. System liquidity improved significantly to open at 234 billion positive. As a result of the significant improvement in system liquidity, interbank rate moderated by an average of 59 basis points as OBB and overnight rate closed at 6% and 6.5% respectively. For today, we expect interbank rate to trade at similar levels, barring any significant change to system liquidity. The parallel market gained 1 naira yesterday to trade at 526 naira to $1, while the earning window opened at 412.04 naira to $1. The highest rate that was recorded yesterday was 415.2 naira to $1, while the closing rate was 411.08 naira to $1. Brent and WTI both gained about 0.7% to open today at 72.12 and $69 per barrel, respectively, amid improved global demand, as US inventory reports showed that inventories fared more than expected last week. The T-bills market traded on a very active note yesterday, with bullish sentiment seen on the short to mid-dated maturities. We observed interest on February, August, and the newly issued November special NTB, while trades were majorly consummated on the 29th November 2021, special NTB, the 11th August 2022, and the 25th August 2022 maturities. Overall, average benchmark rate declined by about 15 basis points to close at 4.45%. The OMO market traded on a very calm note, despite the OMO maturities of about 57 billion that came into the system yesterday. Few interest we are seeing on the February to March maturities, while trades were majorly consummated on the 1st March 2022 and the 15th March 2022 papers. Overall, average benchmark rate rose by about 4 basis points to close at 5.96%. The bonds market traded on a very muted note yesterday, with few demand seen across the benchmark curve as players closed out their books for the month. Interests were majorly seen on the 2028, 2036, and the 2049 papers, while trades were majorly consummated on the 2027, 2029, and the 2050 papers. Overall, average benchmark rate remained unchanged at 11.73%. After the UK holiday that held on Monday, the Eurobond market opened yesterday to a very active session, with buy-side interest in across the sovereigns, most notably on the long-dated sovereigns, the Nigeria 2037, 2042, and the 2049. Offers on the Nigeria 2049 moderated further to settle around 7.84% on the back of the significant demand that was seen on that end. The corporate space also traded on a very active note, with EcoBank and Fidelity Eurobond being the most actively traded yesterday. For our expectation today, we believe that the current sentiment in the bonds market will persist as players continue to share repeat attractive offers across the benchmark curve, while we expect the T-bills market to trade in line with system liquidity. That will be all for fixed income. Thank you.
Thank you very much, Omorege. We'll now be hearing from Boastin, and he'll be giving us some headlines from across Africa. Good morning, Boastin.
Good morning. This is Justina. Good morning, everyone. Yeah. So we'll be starting from the Southern African region with big stories that came in yesterday evening, that Deutsche Bank has cut correspondent banking ties with Stanbic Bank Zimbabwe Limited. The Zimbabwe lender is the latest to have its US dollar correspondent banking services terminated by an international bank. Now, Deutsche is yet to give any reasons for this termination. In South Africa, again, we have South African Association for Savings and Investments that says life insurers have settled claims worth 47.6 billion rand in a year. And the association now says their claims statistics for the current financial year is expected to tell a grim story as they will reflect the severity of the current COVID-19 third wave. Now, South Africa's state-owned power utility, Eskom, narrowed its net loss to 18.9 billion rand for the year ended March, from 20.8 billion rand a year earlier. Eskom is also considering an investment of 106 billion rand on wind and solar energy by 2030. That's in 10 years' time. In the East African region, Rwanda has become the first African country to ratify the agreement for the establishment of the Fund for Export Development in Africa by Afreximbank, while Togo and South Sudan has also become signatories to the agreement, joining Mauritania and Guinea. Also, yesterday afternoon, towards the evening time, we had Kenya's inflation inching up 6.57% in August from a revised 6.55% the previous month. The latest rate was driven by higher food and gas prices. Also, we have Crown Paints reporting a 33.9% net profit growth to 339 million Kenyan shillings in the first half of 2021. And according to Crown Paints, it says higher sales drove this high net profit growth that it reported. For its sales, it says sales increased to 4.9 billion Kenyan shillings from 3.9 billion Kenyan shillings. Now, in the merge for Seychelles Securities Exchange, that's Merge Exchange. Merge Exchange said WM Cypress Ridge, listed on the exchange, is planning to wind up and dissolve the company due to inactivity. And in the northern region, we have Egyptian Commodities Exchange, which is set to begin operations in the first quarter of 2022. And we'll look forward to that as it happens. Also, in the first half of 2021, Moroccan banking group Attijari Wafa posted a 0.7% increase in net banking income to 12.5 billion dirhams as economic activities begin to gradually recover. Also, worthy of note from the West African region and over here in Nigeria is that O&O PLC has yesterday held its AGM to approve the 2018 financial statements. And it says that the 2019 and 2020 results were underway. It also assures timely release of these results going forward. And that's all from us here in Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina. We'll now conclude with Ibukun, our economist, and he'll be speaking to us on the outlook for sub-Saharan Africa for the third quarter. Good morning, Ibukun.
Good morning, Victoria, and good morning to everyone. So yesterday we released our SSAQ3 report, and in that report we spoke about the health situation in Africa, concerning the fact that Africa is already seeing its third wave. However, some other economies are already experiencing their fourth wave, just like Kenya. Kenya has seen 4 waves of the virus now. And up to the economy, this has led to some optimal outcomes, because we discovered that because of the high base, in the first quarter of the year, we saw that Nigeria grew by 0.5%, while Ghana's growth slowed from about 6% in the previous year to 3.1%. Angola specifically declined, it's declined by 3.4%. And that's basically because oil constitutes about 30% of its GDP. So because of the deeper OPEC production costs and as well as restrictions, we saw GDP slump in that country. What we've seen recently over the past 12 months is that due to the pandemic, we've seen social unrest across our major economies. Starting with Nigeria, we can still remember the EndSARS protest, which occurred in October last year. We also saw some anti-government protests in Angola due to the living conditions in that country. In Ghana, we recently saw the Fix the Country protest, which was a cry against unemployment, as well as further harsh socioeconomic effects of the pandemic. Finally, we saw protests in South Africa as a result of the court ruling against Zuma, which led to massive looting and arson in the country. So on to reforms, we discovered that there were 2 key reforms that we attended to during the quarter, and that was the BBI in Kenya, which is the Building the Bridge Initiative, and the Petroleum Industry Bill in Nigeria. So the BBI was basically a political reform that was meant to introduce the position of the Prime Minister. But because it was initiated by the President, the court ruled that the initiative was unconstitutional. And that has implications for Kenya elections, which is coming up next year, which could actually elevate political risk in the country, considering the fact that BBI was introduced to kill election violence in the last election. So up to Nigeria, we saw the PIB being signed into law, and the PIB is a monumental act that actually introduced a lot of changes to the upstream and downstream sector. However, a key effect of that bill will be the commercialization of the NNPC, and which might result in the removal of subsidies 6 months from now. Although labor unions have decided to resist any form of increase, it still remains a key risk under our radar. Moving on to rebasing of the GDP, South Africa actually rebased the GDP and is currently 11% larger than previously thought. Okay, moving on now to inflation. So we've seen that inflation has been somewhat mixed in the region. And Nigeria has been the only country that has recorded a consistent decline in inflation. Meanwhile, higher fuel prices, just like you've heard from Justina, led to higher inflation numbers in Kenya, also influencing inflation in Ghana, as well as other African countries. In Angola, we saw the Monetary Policy Committee hike its benchmark interest rate to 20%, and it could signal the fact that we could be seeing some hawkish responses going forward. Also looking at the fact that the US Fed has decided to, said it could start tapering bond purchases in 2021, we could see more hawkish responses in that to avoid any economic backlash in the economy once that cycle begins. So moving on to the external sector, we see the recent allocation of special drawing rights as a booster for the reserve assets and currencies of FSA economies. Although in Nigeria, we are less optimistic about the parallel market because of the ban on BDCs. Instead, the SDR inflows might rather affect the NAFEX window. But altogether, we actually expect South Africa to unlock about 4 billion, Nigeria about 3 billion, and altogether the 5 countries we cover could unlock close to 10 billion. So that sums it up for our SSA update for Q3. Thank you.
Thank you very much, Ibukun. We'll now quickly take in questions. If you have any questions for our speakers, you can send them in using the chat function on Zoom. If you're joining us from Facebook, you can make use of the comment section. And if you'd prefer to speak, you can use the raise hand function and you'll be called upon to speak. Okay, looks like we do not have any questions today. Just before we conclude, we'd like to announce that we'll be having a special session on Friday where Deji Adebusoye, principal at Sahel Capital, will be speaking with us on food security and meeting the demand of 200 million people. We hope to see you in that session. And on behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we thank you for joining us today. We hope that you have a great day ahead and good morning.